Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 1st of July, 2023, and it's the weekly technical analysis for dollar yen and spot gold over here, where finally it has dipped below the 1900 just to hit the daily 200 EMA before finding support, strong support from this area to bounce back up on the Friday. And similarly, in the inverse fashion, the dollar yen has pushed all the way up to just to hit the 145 round figure before pulling back on the Friday. So a tale of opposites here, with the US dollar being dominant and boosting and trying to recover until the pause on the Friday. So all driven by major central bankers' speeches on the Wednesday from Portugal, where all the leading central bankers highlighted they are still working hard to tighten the monetary policy and increasing rates so that they can bring inflation under control. And that drove the markets down from Wednesday. And dollar yen took advantage and continued its rally from the breakout. Okay, let's take a look at what the key events were from last week that triggered this weakness in the major pairs and spot gold. And take a look ahead for this coming week, the first week of the month and of the second quarter, of the third quarter and the second half of the year. Let's see what we have in store. All right, for last week, the major news was basically the central bankers' speeches for their conference in Portugal. And one by one, all of them had basically the same message. All were hawkish and tightening their monetary policies, and they all want to bring inflation under control. So from Lagarde to Bailey from Bank of England and Powell, of course, all had similar messages, and all the majors suffered as a result, with the dollar rising and getting a boost from Wednesday until Friday, where the core PC price index figures came out. They met expectation, but overall for the year was slightly lower for the year, but market took it as a positive, and after an overextended sell-off already, they managed to boost the market back up to recover somewhat. Meanwhile, there was also other US news, with the consumer confidence also very bullish on the market and economy, and also reflected in the final GDP figure, which was also higher than expected. And for Australia, their CPI figure came in slightly lower than expected, so that could help the RBA coming up this week in their rate decision, where they expected not to hike after their previous month's surprise rate hike already. And on Wednesday, there's the meeting minutes from the FOMC's last meeting last month, and a couple of ISM PMIs for manufacturing and services. But the main highlight also for the week will be the non-farm payroll report on Friday, with forecast of 222,000 jobs to be added compared to the previous month where there was a major surprise with a significant increase. So we'll see whether the jobs market is still robust and strong, which will be a concern for the Fed. All right. We'll see whether the US dollar is able to continue its recovery as the major currencies are continuing their retracement. Let's move back to the analysis. So let's begin with spot gold, where in fact even before the Wednesday conference, the precious metal had already started to retrace lower, and after failing to test this previous support, now resistance, and was not able to even test the previous Friday's high, and after a doji started falling on the Tuesday already, so falling hard all the way until the Thursday, where it dipped below the 1900 round figure, where the 162 fib extension is, and just spiked through the daily 200 EMA to before closing back up as a doji, and then recovered on the Friday with the PC price index data from US. So it did dip down to below to 1893, just at 1893 before climbing back up, and the daily 200 EMA was at just below 1895. And we'll see if this is going to be a start of a recovery, where now it's just the early stages. But before that, let's take a look at the weekly time frame, where it closed as almost a doji, small swing top. There's support from the 1900, and still looking slightly bearish, and where there could be still some more room for it to dip down to the weekly 55 EMA and potentially close the gap from this previous week where it started its climb. So that was in end of February, March, early March. So that will be a dangerous level to dip down to. That's at 1878, so around 1879 or 1880 area. So which is possible. It did dip to 1893, that was low of last week. And also let's take a look on the monthly time frame, since it closed already for the month of June, and that was a bearish close after a long wick spinning top here, and still looking fairly bearish here. So it needs to consolidate and bounce off the 1900. Otherwise, if it breaks, it's going for the 1850 and also that 1880 area where the weekly 55 EMA is. And if it does dip down further, that's the 200 fib at the 1860 area, 1858. But still early. There's still a few more weeks to go to find the price action pattern and to see how much recovery there is from for next week. It needs to climb back up above the 1950 in order to make any significant recovery where the daily 55 EMA is. Otherwise, if it's not able to get to 1950, that's going to be further bearish moves. It could be just consolidation for next week between this zone around the 1935 area down to the daily 200 EMA. Let's call it the 1895 area. Okay, so let's move this to mark this as a major support zone. We could further extend this out to interim resistance. And of course, further up, there's the 1975. That's still quite some way to go. And there's also the interim resistance at the 1950 where it needs to crack through. So that's going to be intermediate resistance. Okay, and this week, a couple of major news from the US, the FOMC meeting minutes and the non-farm payroll report on Friday. So that's going to drive the movement for the US dollar, and we'll see how spot gold react in inverse fashion. So let's compare this with the US dollar index. Here's the DXY, where in an inverse fashion, it's similar to the euro. After a pullback, managed to find support and then bounce from the 102 level and managed to climb all the way back up to 103. Spiked through it on the Friday, but then fell back down to pull back. Still finding support at the daily 55 EMA. We'll see if that's able to hold this coming week. But overall, it's still consolidating within the larger triangle here. So it needs to break out higher back above the 103 to test the daily 200 and the 21 FIB retracement area. Still should be strong support from the 50 FIB as well as this lower trend line. Let's take a look on the weekly time frame, and just as the euro, which was doji, is closed as a spinning top, small spinning top, and blocked by the weekly 55 EMA above. So it's could still be consolidating between these zones, but it's trying to creep back up to the 103. It needs to break the 103 and the weekly 55 EMA. Let's also take a look on the weekly time frame. The monthly time frame, since June has already ended, and it managed to bounce from the support level and still consolidating within the previous month's candle. So it could be still some more consolidation before any breakout either way. Okay. So resistance is still the same area, and interim support now at the 50 fib. Then below that, the 62 fib, that has to be major support now. Let's remove this one here. Okay. All right, let's move back to the other pairs. Let's take a look at the dollar against Japanese yen, where it has been bullish since the breakout of this descending triangle. And basically from the 140 all the way to hit 145 last Friday. That's a 500 pip move over 3 weeks. And now we'll see how much retracement there's going to be. So 142 was still quite safe, and just continued to rally all the way throughout the week until Friday. So let's also check the weekly time frame. And it closed as a bullish spinning top, so it's not much of a retracement or pullback. Still in a bullish mode. Could be just consolidation this week before any further moves. Then we'll see what the whether there's any intervention from the Bank of Japan in order to stem the weakness in the Japanese yen. On the monthly close, that's a very strong bullish move. And just right at the 145. So let's see how much retracement or consolidation there is, but looks like there is still strong bullish momentum. So we may need some intervention to stem its strength. From the US dollar. And that has gone through the 262 fib extension. Let's move this to this area now from this swing move up. And 162 is just above the 145 is at the 50 area. Yeah, let's update this here. I'm hesitant to move to the current swing high unless there's a clear retracement further down. But for now, there's still going to be some continuation move, potentially some continuation move. $142 is going to be interim support with the major support coming from this swing high of this triangle. And for now, the major resistance could move it up to the 162 fib extension. So let's see how much pullback there is this week, and whether it's going to cross the 145, maybe just to hit and spike the 162 before pulling back to consolidate further. If it does retrace further down, then there is a strong support from the 142. So let's see how much the US news is going to impact the dollar yen for next week. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.